All right, in today's video, I'm going to be talking about using your cash value for an investment property. And I'm specifically talking about the cash value of a whole life insurance policy. So let's just dive right into things. So let's say you've built up $200,000 in cash value in your policy, and there was a real estate investment opportunity that came across your table, and you need $100,000 for the down payment. What you could do in this scenario is, since you've got 200K in your cash value, you can request a loan of $100,000 from the insurance carrier that you're with. So we'll put $100,000 loan. Now, keep in mind, this loan that you're getting from the insurance carrier, you're going to have to pay interest on that. And we'll put that at 5%. That's pretty standard across the board right now. So you've got a $100,000 loan at 5% interest from the insurance carrier. Now, keep in mind that $200,000 in your cash value, that full amount, even though you have a $100,000 loan against it, that full $200,000 is still going to earn interest and dividends completely uninterrupted. In your policy with interest and dividends, you might be getting 6%. So I wanted to break that part down because it's really important to be aware of. So I've got the $100,000 loan now, and just to touch on that a bit more, it usually takes around 3 to 5 business days after requesting the loan to get that in your bank account. And to get that loan, there's no credit check. They're not going to ask you what you're planning to use the money for. And most importantly, there's no loan repayment schedule on that. You can decide how you want to repay that loan back to the insurance carrier. So you have a lot of flexibility when you're taking loans out against your cash value from an insurance carrier. So now you've got the $100,000 in your bank account. What you're going to do now is use that as the down payment. So you want to use that as the down payment on your property. In this example, that's supposed to be my drawing of a house. So now you use the $100,000 as the DP. I'll put that as down payment here. You can get the other, let's just say it was 20% down. You could get the other 400K through a bank if you want still. And now the cash flow, assuming it's a rental property, you'd want to use the cash flow from the property to pay back that loan. So now you've used the insurance carrier's money to acquire this asset, this piece of property. You use the insurance carrier's money and the bank's money to acquire this property. That's cash flowing, appreciating in value. You're going to use the rental income from the property to pay the loan back. And the whole entire time that this process was happening, your cash value, your $200,000, was earning interest in the policy. So the entire time, this was your policy, slowly but surely continuing the compound to grow over time. And you successfully used your money or made money on the same dollar twice. You got the money earning interest in the policy growing, and then now you have this piece of property that hopefully cash flows and will continue to appreciate over time. So I hope this short video just helped really just explain how you can use the cash value in your policy for investment opportunities, specifically for real estate. It's a lot quicker of a process to go through an insurance carrier to obtain a loan than going through a bank. And also, you don't have all the red tape of going through a bank. Like I explained earlier, there's no credit checks. You have complete flexibility in how you want to repay that loan back to the insurance carrier, and they're not going to ask you what you're going to use the money for. And it's a relatively quick process to turnaround process to get that money in your bank account, 3 to 5 business days. So I'll make other videos, other use cases of how you can leverage your policy. But I hope this helped. If you have any questions, leave them in the comments below, and I'll see you in the next video.